Hi everyone, thanks for joining me today. Recently, there have been quite a lot of discussions surrounding the latest EC's measure and where the market may be heading next. One thing many people were actually speculating about was whether the EC income ceiling would be increased further. With rising incomes and increasing property prices, some buyers were hoping the government might raise the ceiling again to allow more households to qualify for ECs. However, that did not happen. Instead, the government chose to keep the current income ceiling while introducing measures aimed at maintaining affordability and keeping the market stable in the long run. The main concern is that if demand keeps rising too aggressively, prices may continue moving up too quickly, making it harder for genuine home buyers to enter the market. So while some buyers may feel disappointed that income ceiling wasn't increased, these measures are really meant to balance demand, reduce overheating, and ensure ECs continue serving their original purpose as a more affordable housing options for Singaporean families. So wherever changes like this happen, it naturally creates uncertainty. But at the same time, it can also create opportunities for buyers and owners who understand the market well and act early. So in today's video, I'll be sharing the impact of the latest EC measures, what opportunities may lie ahead, and what actions you can consider taking right now. Let's get started. Let's take a look at the latest changes to the EC framework that were introduced on the 8th of May 2026 and what they actually mean in simpler terms. There are 4 major changes. The first one is actually the extension of the MOP period from 5 to 10 years. While the privatization period has also been extended from 10 to 15 years, meaning EC owners now need to hold their property for a longer period before it becomes fully privatized. And the second changes is actually the increase in the first-timer quota from 70 to 90%, while the second-timer quota has been reduced from 30 to 10%, showing that the government wants to prioritize first-time home buyers in this case. And the third changes is basically the extension of the priority period for the first-timer from 1 month to 2 years, giving them more opportunities and less pressure when trying to secure a unit during the launch periods. Lastly is the deferred payment scheme, and this deferred payment scheme has been removed, meaning buyers will not only be able to purchase under the normal payment scheme, requiring a more careful financial planning during the construction, as buyers who are still serving the existing loan for their current HDB needs to service 2 loans. Overall, these changes aims to make ECs more focused on long-term home ownership, affordability, and genuine buyers rather than a short-term speculation. Let's take a closer look at the first major change, the extension of MOP and privatization period. Previously, EC owners only need to fulfill a 5 years MOP period before they could sell it to Singaporeans and PRs. Or they can actually rent out the entire unit once the MOP is fulfilled. And after 10 years, the EC will become fully privatized, which means that they can actually sell it to the foreigners over here. But under the new EC rulings announced on 8th of May 2026, the MOP will increase from 5 years to 10 years, and the privatization period will increase from 10 years to 15 years. Essentially, owners will need to hold the EC for a much longer period before enjoying the flexibility previous EC buyers had. So the government goal is to reinforce the idea that EC are meant for long-term home ownership rather than short-term investment or flipping. While this may not be a major issue for genuine long-term home buyers, it changes the strategy significantly for buyers hoping for quicker capital gains. So at the same time, future EC supply may become more limited under the new measures, which could essentially make those well-located ECs more valuable. And the next question many people are asking is, what impact will this 10 years MOP actually have on the market? Some first-time buyers may become more cautious toward EC because a 10 years MOP period is a very long commitment. Do you agree? Especially for younger couples who value flexibility and may wonder whether they are comfortable holding the property for such a long period. So at the same time, buyers who genuinely looking for a long-term homes may still find ECs attractive because of the pricing advantage compared to private condos. And secondly, Do you think the resale or private new launch will have a higher demand? Demand may gradually shift towards resale condos or private new launches, as some buyers may prefer property with fewer restrictions and more flexibility. So with a longer holding period for ECs, fewer units are expected to enter the resale market over the time, resulting in a tighter resale EC supply. So by the time these units fulfill their MOP, they will also be at least 10 years old, which could further reshape buyers' preference moving forward. Now let's move on to the second major change, which is the increase in priority quota for first-timer applicants. And honestly, this is one of the clearest signals showing that government wants to prioritize moving forward. Previously, during the initial launch period for EC projects, 70% of the units were allocated to the first-timer applicants, which 30% was allocated to the second-timers. But under the new framework, the allocation rules actually changes quite significantly. The first-timer quota has been increased from 70% to 90%, while the second-timer has been reduced from 30% to 10%. So what does this mean in simple terms? It means first-time buyers will now have a much higher chance of securing an EC unit during the launch. This is especially helpful for young couples and family entering the property market for the first time, as competition from second-timers will become much lower during the initial booking phase. At the same time though, second-timers may now face greater competition because the available allocation has become much smaller. So for upgraders who are planning to move from HDB to EC, timing and planning may become even more important moving forward. But overall, the intention behind this change is quite clear. The government wants ECs to remain more accessible for first-time home buyers instead of becoming overly competitive for people who are already owning subsidized housing before. And from a market perspective, this could potentially increase demand among first-timers, especially for well-priced and well-located ECs launches in the future. And the third change is basically to extend the priority period for the first-timers. Previously, first-timer buyers only had a 1-month priority period during the launch phase, and now it has been extended to 2 years. And this means that for the first 2 years of an EC launch, first-time buyers will continue receiving priority access to available units. If the second-timer quota has already been filled, second-timers will need to wait until the priority period ends before accessing to the remaining units. And obviously, this gives the first-timers a much bigger advantage and offering them more opportunities, less pressure during the launch periods, and potentially a better selection of units over a longer period. However, second-timers may need to wait longer, considering resale ECs or potentially explore private properties options instead. So after looking at all these new measures, right, and the next question is naturally, why is there a need for all these changes? First, EC prices has been rising very quickly over the past few years, increasing from 782 per square feet to 1,843 per square foot. And because EC were originally introduced as a more affordable option for middle-income Singaporean families, so rising prices become a growing concern. And secondly, more second-timers are buying new EC units over than the first-timers. According to Ministry of National Development, the proportion of first-timer buyers fell from 50% to 30% and 40% over the past 4 to 5 years. As a result, the government introduced higher first-timer quotas, longer priority periods, and tighter restrictions to shift the focus back towards the genuine first-time buyers and keep the EC more sustainable and less driven by short-term investment demand. And now let's talk about the possible impact of the new 90% first-timer quota and the extended 2 years priority period. Because honestly, this could change the buyer behavior quite a lot moving forward. If you look at the current EC launches here, right, first-timer typically make up 30 to 40% of the sales, while second-timer currently have 30% of the quota. So usually after the first month, the remaining units will be opened up to the second-timers as well, which is why many EC projects today are able to sell around 80 to almost 100% relatively quickly after the launch. But under the new EC measures, right, things can change quite significantly. Although first-timer will now have up to 90% of the quota. Historically, first-timer alone may only account for only 30 to 40% of the sales, while second-timers will now only have 10% of the quota during the priority period. This creates an important question about whether EC's launches may take a longer time to clear. Since second-timer may need to wait up 2 years, and since the second-timer may need to wait up to 2 years before accessing to the remaining units, some upgraders may instead shift towards the resale EC, or resale condos, or even private new launches, potentially increasing the demand in this segment moving forward. And the next big question is, will these EC measures actually become a concern in the long run? And honestly, the answer may not be as negative as some people initially think. From the point an EC land site is awarded to actual project launch, it's already taking about 15 months on average, followed by another 2 years or more before TOP or key collection. By the time second-timer eventually get broader access after the 2 years priority period, the project could already be approaching completion. And this may actually create some advantage for second-timers or upgraders, because buying closer to the TOP period could mean less waiting time, faster move-in, and potentially low holding costs from managing 2 properties or temporary housing arrangements. At the same time, first-timers still benefit because they receive priority access much earlier during the launch stages. So while the new measures may initially look restrictive, the market could eventually adapt naturally depending on different buyer needs and timelines. And now let's move on to the fourth major change, the removal of the Deferred Payment Scheme, also known as DPS. For EC projects on land sites acquired on or after 8 of May 2026, buyers will no longer be able to purchase under the DPS and must instead use the normal progressive payment scheme, and which is what we call MPS. Previously, under the DPS, buyer mainly paid the booking fee and down payment first, which forms up to be 20% of the purchase price, while the bulk of the home loan only start closer to TOP or key collection. This was very helpful for many upgraders because it reduced the pressure of managing 2 properties at the same time. However, with the normal payment scheme becoming the only option now, buyers will now start servicing the interest and loan installments progressively during the construction stages. This increases the importance of financial planning and cash flow management, especially for second-timers and upgraders managing the transition between the properties as they need to service 2 loans concurrently. What impact will the removal of the DPS to the overall property market? Without DPS, buying an EC becomes financially more demanding for some buyers because they now need to service their loan progressively during the construction period instead of delaying the repayments until the TOP. Previously, many upgraders prefer EC because DPS gives them more flexibility when managing the sale of their current home. So as a result of this, I would think some buyers may start considering resale condos or private new launches instead, especially if they value flexibility, immediate move-in, or shorter waiting time. While some buyers may still choose ECs because of the pricing advantage compared to private condos, the removal of the DPS may redistribute demand across different housing segments, depending on each buyer's financial situation and priorities. And this example here shows something very interesting. When compared EC affordability under MSR versus private property affordability under TDSR. So in this scenario, a couple earning a combined income of $16,000 per month may have more limited affordability under the EC financing because of the stricter MSR cap. You can see under the MSR rule, they can only qualify for a maximum loan of $930,000. However, under the private property financing using the TDSR, they are actually qualified for $1.7 million of maximum loan, which means that they can easily afford a property price worth $2.27 million. And this means some EC buyers may realize they are financially capable of entering certain segments of private property market as well. As buyers compare longer EC MOPs, the removal of the DPS, tighter restrictions, and progressive payment obligations, some may increasingly ask whether they should still wait out for an EC if they can already afford a certain private property. And after looking at all the changes individually, Let's now summarize what are the immediate impacts we may start seeing in the market. The longer 10-year MOP and 15-year privatization timeline reinforce long-term home ownership and reduce speculative buying, although they may already create stronger scarcity in the future due to the reduced resale supply. So at the same time, the higher first-timer quota give first-time buyers a stronger chance of securing the units. At the same time, the higher priority quota for first-timer actually give a stronger chance for the first-time buyers to secure the units with lesser competition. And the extended 2 years priority period further strengthen the first-timer advantage, while the second-timers may increasingly explore resale ECs, resale condos or private launches instead. And lastly, the removal of the deferred payment scheme may have one of the biggest financial impacts because buyers now need to start servicing their mortgage earlier. So we have covered quite a bit on the impact to the buyers. Now let's look at it from another important angle. What is the impact to the developers? Looking further ahead, we foresee developers may become more cautious in the future land bids because buyer profiles are expected to change due to the tighter second-timer access, longer MOP and the removal of the deferred payment scheme. And developers may also need to rethink on the pricing, layout, and unit mix strategies to better suit first-time buyers and affordability needs moving forward. In the short term, especially for 2026 and 2027 new EC launches, existing EC stock may become more attractive because the project launched before the new rules, which is before 8th of May of 2026, still enjoy the shorter 5-year MOP. Earlier privatization timeline and deferred payment scheme benefits were applicable. And for many buyers, especially second-timers, this project may feel like the last opportunity before the tighter rules fully kicks in. Do you agree? I guess more second-timers will churn to the project that are not affected by these rules. And next, do you foresee the future EC selling price will be higher or lower? So here's my take. Even though the developer may be cautious on the land bid, and they may have bidded the land lower, however, property prices are not driven by land cost alone. The final selling price of an EC or condo is made up of many different components, including land costs, construction costs, inflation, labor costs, material costs, and so on and so forth. As the costs continue to rise over the time, developers naturally need to factor them into the selling price of the new projects. So when buyers see higher property prices today, it is really the result of all these multiple cost pressures adding up across the entire development process, and not just because the land prices increase. And now looking ahead, these are the 5 upcoming EC launches that is not affected by the new measures. And this project could continue seeing a strong demand, especially from second-timers. And many buyers may view these 5 upcoming new launches as their last opportunity to enter the EC markets before the new policy changes fully take effect, because this project still benefits from the shorter 5 years MOP, earlier privatization timeline, and more flexible buying conditions. And at the same time, EC launch prices have already been trending upwards. And based on current land and development costs, future EC launch could potentially continue pricing above $1,750 per square feet range. And lastly, another important factor to watch is the government continued effort to increase the overall housing supply. HDB is expected to exceed its target of 55,000 new flats between 2025 to 2027, with more BTO launches planned in the coming years. The government is trying to balance affordability and housing demand by increasing supply across different housing segments. So more BTO supply could help to ease the pressure on the resale HDB prices over the time, especially for first-time buyers who may otherwise turn to resale flats due to limited options as they may have their preferred location in mind. And now let's look at what's happening in the HDB resale market. So based on the recent data, HDB resale prices have started slowing down from Q1 2026. And you can see there is a dip of 0.1%. Previously, the prices were rising at a double digit, but growth slowed down to 2.9% in 2025, followed by a slight 0.1% drop in Q1 2026. So this could mean the market is gradually cooling and becoming more stable after rising very quickly over the past few years. Factors like more BTO supply, affordability concerns, cooling measures, and buyers becoming more cautious may all be contributing to this slowdown. And here's the question many homeowners are asking. If the market is starting to slow down, should you think about selling now? Over the past few years, HDB prices have gone up quite a lot. But recently, the price growth has started to slowing down. More BTO flats are coming, more owners will soon be reaching the MOP, and buyers are becoming more careful because homes are getting more and more expensive. And this doesn't mean the market is crashing, but it could mean the current strong prices we are seeing today may not keep rising as fast as before. And honestly, many homeowners are already sitting on a very good profits right now. So for some people, this may actually be a good time to start exploring their options. And this chart shows the number of HDB flats reaching their MOP. This means more homeowners may become eligible to sell their flats or upgrade to private properties or ECs. As resale supply increases, this could help moderate HDB resale price growth and provide buyers with more options. And this chart shows the new EC prices have risen significantly over the past few years. The average EC prices increases from 1,100 in 2020 to 1,900 in year 2026, which is almost an increase of 70%. The steady rise reflects increasing land costs, construction costs, inflation, and strong upgrader demand. So it also explains why the government is stepping in today with a tighter EC measures to keep ECs more focused on owner-occupiers and for first-time buyers rather than speculative demand. And so basically, these are the 5 upcoming ECs that's not affected by the new measures. So these old rule ECs are likely to command stronger pricing and demand, especially for second-timers who may see these launches as the last chance before the tighter ECs rules fully kick in. And this table estimates the potential pricing of upcoming EC launches based on the land costs and projected break-even prices. Except for Coastal Cabana, which has already been launched, the rest of the upcoming EC with the break-even prices estimated around 1,277 to 1,615. Projects with higher land bids such as the Woodlands Drive 17 may require launch prices well above 1,700 to 1,900 per square feet for developers to maintain the profit margins. So in total, around 2,323 units are GRS sites that were sold before the new measures. More future supply are expected from Canberra and Sembawang area, but this will be sold under the new measures. Alright, I've come to the end of my video. Just to sum up, the EC market is actually entering a major shift. With longer MOP, removal of the DPS, with tighter rules for second-timers, future ECs will likely become harder to enter, hold longer, and potentially more limited in supply. So at the same time, rising land and construction costs are still pushing the price upwards. And that's why many buyers are now watching the current EC launches closely, as this could be the last batch under the old, more flexible rules. Meanwhile, the HDB resale market is also starting to cool after years of strong growth. So in a changing market like this, timing, strategies, and planning matters more than ever. If you are unsure how these changes may affect your property plans, feel free to reach out to me for a casual discussion and personalized advice based on your own situation.